We have been talking about the AI narrative cooling down for a very long time, but here's some news events that show this might be coming to fruition. Apple is now seeking to source Chinese blacklisted memory chips because we've known for a very long time that Chinese AI, such as DeepSeek, has been fairly efficient as compared to ChatGPT. So stocks such as Micron Tech, NVDA, and SPX, which were having moves based on the move on AI, might be having a bit more of a cooling narrative. But on the other side, risk assets such as Bitcoin, which have been completely sold off, losing the 200-week MA, are actually coming towards the Fibonacci levels, the RSI divergence, signaling a little bit of bullish strength, and a particular chart that has never been broken down in support, such as the Bitcoin power law that we're going to discuss in today's video to actually show you an aspect that might, from the AI perspective, be overdone, and then from the crypto perspective, maybe too oversold and bottoming or very close to bottoming now. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across all markets. Now, we are into our end of week session, and I think the first point of discussion over here is US and Iran exchange strikes and accuse each other of violating the ceasefire. I'm not going to lie, I would love to someday actually start my videos without having to discuss this particular news event between US and Iran, but this has played a massive impact on the last couple of months' price action. So it is really good to be staying informed regarding this. At the end of the day, US has said that they've done these new strikes on Iran because Iran did a drone attack for a Panama flagged vessel, which apparently was not following through with the right passage through the Strait of Hormuz. So they fired a couple of drones on that particular vessel, and then US said they responded with hitting multiple targets due to a direct response to the continued aggression that Iran has showed. So with that being said, keep that in mind. Now the Strait of Hormuz is still open, which is good and operational, but it kind of hangs in the balance when you hear news events like this. And honestly, I wouldn't want to hear something like this just dropping the pin and we have back onto the war, but it's just something for us to know that this is how thin the needle hangs. This is how thin the string hangs. But anyway, with that being said, the next aspect, which is one of the main topics today, is Apple is now seeking to source Chinese blacklisted memory chips. This came from some previous issues that Apple and Micron had due to a public clash that the memory suppliers of the companies, like one of the reasons why Apple is having to hike its prices is because of the memory supply issues that Micron Tech cannot deliver on. So basically, they've also made the case that Chinese memory chips are actually cheaper and therefore America should lift its blacklist ban so that Apple can get its sourcing done. And look, this has been the case for many instances. DeepSeek AI and all these prop-ups that have come up. And recently, even the Anthropic's AI model Mythos, recently a new Chinese AI model has actually come out to provide that similar level of security protection from a cybersecurity perspective and at a very cheaper cost. So we know that China has been producing these chips at a much cheaper cost and is giving concerns that the current AI trade might be overhyped right now, and the global AI stock boom might actually be in a bit of a bubble. This comes from China itself, who, by the way, are sourcing these really cheap manufacturing chips. So it causes a bit of a room for concern because Micron Tech over the last 84 days has done a 303% move, massively overbought in the RSI and at the same time the MACD as well. This might be your point to realize, okay, if you have made profits right now, is it in consideration for you to be looking at cooling that off or to be taking some profits over here? Because when I read headlines just like this, when I see NVIDIA, which is being trailing back to test its 200-day MA, when I see the SPX, which is also cooled down from its linear resistance, this is the point for me to be considering, okay, maybe we are very overheated right now, and this might be the time for us to cool off before we consider our next moves over here. And something for the current good is the price action for Brent crude. Oil has been going cheaper, obviously because of the Strait of Hormuz opening. And while that's been happening, I did mention that we might be testing the 72 level pretty soon. We have come to the lows of 72.8. So yeah, we're coming really close towards bottoming to this Fibonacci level of 0.786. So bear that in mind, and that's going to have a very positive impact on US inflation. And if US inflation goes down, that actually ends up meaning that the Fed interest rates might also be impacted to the positive. And when we were talking about last week, where we were going to have maybe 2 or 3 rate hikes, you can just see that was just a lot of panic because right now they're only pricing in 1 rate hike for the year. Do you see that? We went from 2 to 3 rate hikes only to 1. And I personally believe, that the probability that we're going to have a 30% probability that we'll have a rate hike in the next meeting, I think that's going to go down even more to probably nothing. And I'm personally calling for the fact that we're not going to have any rate hikes this year because if this war is fixed up, then in that case, oil's going to keep going down. And that was our biggest inflationary concern. Otherwise, we were in a rate cut environment. Combine that with the fact that we've been discussing about the US yield. In our last video, the spread between the 10-year yield and the 2-year yield was at about 0.23 to 0.19. Now we're at 0.41, which basically means that the spread between long-term borrowing and short-term borrowing is becoming healthier, that people are actually taking a bit more of a long-term growth perspective and thinking that that yield is going to pay off better, which is really good for the American economy. And all of this adds up to the fact that the Fed Chair Kevin Warsh is actually going to speak on July 14 before the House Financial Services Committee. And if he can say at that time that Brent crude is doing good, that the spread between the long-term bonds and the short-term bonds is looking good, that might actually deliver a bit of a positive aspect on the American economy and show the fact that, hey, we might not be looking at rate hikes this particular year. And something else that shows us that risk on narrative being very strong right now is the chart for the Russell 2000. You can just see that's been setting all-time highs. In the last 2 days of trading, we have hit an all-time high, really going above that 3,000 mark. So this is signaling some real strength combined with the aspect of what we have been discussing regarding copper versus gold. We have just been seeing risk on narrative being fairly strong, and it's really good to see that in fruition. Where we haven't been seeing that though is Bitcoin. And I'm here with you. I personally am not a fan of the fact that we have broken down from the 200-week MA. Not confirmed yet, but also the probability that this goes back up by Monday morning tomorrow, is the probabilities aren't that great. But what we haven't broken through is a key level at 57.8K, which is a Fibonacci level over here that I've drafted from the lows of 15,000 in the 2022 bear market to the highs of the 126,000 of the very recent last 6 months all-time high. So with that being said, 57 holds very strong. Another thing that we're having is the RSI divergence on the weekly and actually on the daily as well. For now, I'll show you on the weekly, we've been making lower lows on the price action, but on the RSI, we've been making higher highs. And even on the daily, if you have a look over here, I'll draw it out really quickly. We've been making lower lows over here on the price action, but again, higher highs. So both the daily and the weekly are giving us positive swings. Another aspect to confirm the 57K support level over here is it is a point of control for Bitcoin, where the most active trading for Bitcoin has occurred at the 57,000 level. That supports a bit of a volume profile to say that the highest volume of Bitcoin was traded over that particular specific price level of 57K. That's another thing. And lastly, a lot of social media is covering this right now, known as the Bitcoin long-term power law. Basically, this is a linear regression over a logarithmic chart of Bitcoin. And if I zoom in over here for you guys, you can see over here that in the past, we have never broken below this red support line. So when we zoom over here, right now, that particular support price sits at 59K. So definitively speaking, yes, we did break above it, but we are currently holding at 60K, which is pretty good. But this particular price action holding and showing us that, this linear regression model has held strength over time, then in that particular case, we could be seeing a bit of a bounce on all things considered. Now, with that being said, the monthly chart that we've been covering, which has been showing the 13 years worth of price action support. This is concerning because right now this 13-year price action support is having a breakdown and most likely in 2 days will confirm a candle close on the monthly below this trend line. If we obviously don't move $10,000 in Bitcoin in the next 2 days, which is fairly doubtful. I won't go and say that's a supportive thesis. Things can happen, but doesn't seem probable right now. But if we close below this and have another monthly close below this particular trend support line, that confirms a fairly strong bearish price action, which is where I would go ahead to say, okay, yep, we are heading into very bearish territory where October and December could be that particular period where we are confirming to bottom out as compared to the 4-year cycle. But the reverse narrative for that, which would be a positive effect, would be the fact that journalists within the Senate and the House, especially Eleanor Terrett, who I believe is who has a good coverage in this particular news perspective, she has said that there's a renewed sense of urgency amongst the GOP lawmakers to get the Clarity Act passed. So this is really good. They basically say that when senators return from recess on July 13th, I think they get too many holidays, but I'm not an American, so I can't really say. The fact that they'll have 20 working days, roughly 4 weeks, to get this legislation reviewed and possibly pass through and then back to the House before the August recess for the midterm elections. And this happens, or if this progresses, the narrative for crypto would be really strong, which is where the Bitcoin bottoming signals and growth aspect could really kick in if we have this correct narrative. And if you also see over here, Ethereum, yes, on the weekly is looking horrible, and we have been closing multiple weekly below this, but in a support of the Clarity Act, with oil prices going down and Kevin Walsh coming in and saying likely that there won't be any rate hikes this year, that particular trend reversal could come in, especially when short liquidations compared to long liquidations for both Bitcoin and Ethereum are so skewed. Like you can just see over here, there's generally a 1-to-4 ratio with about 4 times as much short liquidations to long liquidations for Bitcoin and Ethereum. So generally the price movement for this particular risk asset category is weighed to the upside. When that trigger occurs, when that particular narrative executes, is what I'm waiting for. I could be wrong, and that could be 3 months down the line. I don't think this time we play out with the 4-year cycle narrative. I believe if the market decides to go risk on in the American economy or the connected economies, then this will have its move as well. But I'm happy to be proven wrong, and I'm happy for Steve to share his insights and his thoughts.
All right, well, thank you very much for that, Yash. And yes, there are a lot of public holidays going on over in the United States at the moment. We had Juneteenth recently, and of course we've got the 4th of July celebrations for them shortly as well too. So yeah, we have to let them have their fun. But it was interesting that you mentioned Eleanor's commentary there in terms of the Clarity Act as well too, because I remember the last time you actually referred to that, she was extremely negative in terms of Clarity Act even going through at all. And basically saying, nope, never, not going to happen. Seems as though she's actually becoming very, very more towards, well, here you go, there's a potential of this happening once the recess is over, and we'll see how things go from there. So should be very interesting to see how things do pan out from there. But also quite interesting seeing your chart there as well in terms of that Fibonacci level at the 57,000 level, and the fact that we actually have been bouncing off that level there too. I'll enlarge this a little so we can really see exactly what's going on at those levels. And you can see that in terms of that 57,000 level that you have drawn on your chart, aligning very nicely with the prior support resistance line from February 2021. So very, very fascinating there when you look at that. Now, should we have a big bounce coming through and aligning with your monthly chart that you were actually saying in terms of that support line that's been broken so far on that monthly chart, and then whether or not we actually get back above that line, which I think was around about 69,000 over the next 2 days, that's a big tall ask. To get back above there, you've got to get back up above this area here, which is pretty much up to where that quarterly VWAP is, really up around that 70,000 mark. And in order to do that over the next 2 days, you've got all of these resistance lines to cover in terms of getting up through there. So I would say that it is fairly safe to say that you are going to get that red candle on that monthly chart. And like you said, you would more than likely have over the next couple of months some red candles or even some green candles, doesn't really matter which coloured candles they would be, that would be forming underneath that sloping line on your monthly chart. What would happen from that point of view would be you would have a formation of candles that will form on your monthly chart under that sloping line upwards. And when you actually get lower highs and lower lows forming under that sloping line, that formation under that sloping line would then be coming back up under the line to test that now resistance line from under that resistance line. What it does in terms of coming back up to test that resistance line is what is most going to be important in relation to the long-term formation on that monthly chart from that point onwards. So watch that space in relation to that. So there's a lot going on in relation to Bitcoin's long-term performance. But then you take a look at the short-term performance, which is this chart overall here. Now let's switch to our side-by-side chart, which will actually show a lot more in relation to the short-term movements from the perspective of what we just saw on that chart in terms of the right-hand side, but also in terms of the left-hand side in terms of our Ichimoku. Now the Ichimoku looks as though it's starting to form a bit of a swing up in terms of the lagging indicator there, but it's not really doing all that much in terms of the overall trend. The trend is just trying to find its base. The baseline itself, being the red line, is coming down to meet up with the overall trend line, but it has to actually cross that Tenkan-Sen blue line first before we actually get any potential change in trend as well. We could potentially getting a double bottom going along in terms of price action, but we'd need to actually have more of a hammering out in price action first and then getting above the short-term moving averages as well before we can really say we've got some more price action going on with Bitcoin. Going across to Ethereum, similar kind of price action as well, as you can see. Basically, the lagging indicator, also your Tenkan-Sen and your baseline are doing exactly the same thing as well. So really a matter of wait and see, wait for the base to form in relation to all of these and see if we can actually get above these short-term moving averages more than anything else. But what do you really have that's trying to support all of this price action as well? You mentioned it in your presentation there, Yash, and that really is coming down more than anything else in terms of some action on the markets itself. And it comes down to this in terms of the Russell. You had all-time highs forming in the Russell during the week, and this is supportive for the overall market structure in general. You can see higher highs and higher lows with a lagging indicator. That's a sign of strength. You're seeing the Tenkan-Sen blue line really breaking away from the baseline as well. Overall sign of strength going on there as well. And we're seeing some good support from the short-term moving averages as well. So overall, everything's going along quite nicely in terms of the Russell. It's also being supported by the bonds. The bonds themselves have actually shown a fair amount of strength as well. You can actually see a really, really good thing here with the Ichimoku curve as well in terms of the lagging indicator in particular breaking through the cloud. A really, really good positive sign overall there too. On top of that, the Tenkan-Sen trend line has actually broken through the cloud as well as the prior support area, which is a really fascinating thing to actually see as well too. So overall, a lot of strength is actually now coming into the bond sector. This is not something we've been actually able to say for quite some time. With the bonds going up in such a strong fashion, as well as also being supported by the yearly VWAP, out of all interest as well too. All of these kind of things are actually showing a lot of support now in relation to reducing interest rates on the 10-year yield. And you can really see that as well in relation to the mere fact that we actually are seeing the price action itself breaking down beneath the 50-day moving average as well as your short-term moving averages as well. Even so, we're probably more than likely coming down towards the 100-day moving average at this point, supported fully by your lagging indicator breaking through both the Tenkan-Sen blue line and the baseline. All very positive signs in terms of a reducing yield. See how all of this is forming together. Really, really interesting narrative overall. We've got bonds rising, bond yields decreasing, and a strengthening Russell. All really, really massively strong elements overall in terms of the market. The only thing that I'm seeing as being potential problems with all of this story, though, are a couple of things. Let's have a look at those. The Dow itself, not looking too bad, reasonable strength, But we've got a couple of wicks at the top here, which are actually showing a bit of selling pressure over the last couple of days. So that in itself, okay, a little bit concerning, not overly concerning, but a little bit concerning. The SPY and the Qs, these are really showing some weakness in recent times. Take a look at this. Lower highs and lower lows in terms of the price action. We've also got some struggle against the short-term moving averages and also the 50-day moving average. Big concern there. This is the bigger concern, though. Take a look at the Ichimoku, and we were discussing this earlier in the week as well. We were also saying, we were big time saying to be concerned about the lower highs and the lower lows forming on the lagging indicator in relation to this. It's really, really forming. The bigger concern, though, is actually the breach of the Tenkan Sen that's actually occurred here in relation to the lagging indicator. That's big number one strike. The second big number two strike was the breach beneath the unit price by the lagging indicator. That's strike number two that I noted last week. The Tenkan Sen actually crossing beneath the baseline, being the blue line crossing the red line. Big problem there. But the real strike number three is the unit price here now closing below the cloud. So we've got a lot of major problems here that are actually occurring here in terms of warning signals. Let's keep an eye on this one here, but it's looking as though we're actually having more and more concerns. The fact that it's closed below the 50-day moving average here as well, even more concerning. Let's see how it really does come along in terms of actually fully testing this quarterly VWAP in this upcoming week. The Qs, a very similar kind of story, but not as bad as the SPY at this point in time. Probably being supported by the likes of Micron at this stage in terms of the big earnings report that happened during the week. It hasn't closed beneath, or the lagging indicator hasn't actually breached the Tenkan Sen as yet, and it hasn't breached the unit prices yet either. It had breached, in terms of the Tenkan Sen, it had breached the baseline in terms of that red line, but it didn't close the week beneath it. So that's an interesting point. And we haven't actually closed beneath the cloud at this point in time in terms of the unit price either. So we've got a bit more relative strength when it comes to the Qs at this point, but the SPY is definitely the weakest out of the four major indices right now. Be interesting at this point also to take a look at the Dow Jones Transportation Average, see how that's going. Okay, with that, we're actually getting a little bit of support from the short-term moving averages at this point. So not so bad, and we're actually got a reasonable amount of strength in terms of some higher highs and higher lows on the lagging indicator at this stage. So things are looking fairly good at this point in terms of Dow Theory from the perspective of the Dow Jones Transportation Average. So not so bad in that way. How about the dollar? The dollar still fairly stubborn at this stage. You can really see that from the lagging indicators. Higher highs, higher lows overall with that. Tenkan Sen above the baseline as well. And we're still actually straddling along with the short-term moving averages as well. So nothing seems to be stopping the dollar at this point. And as we know, that can generally tend to suggest that people are staying away from the US economy overall in relation to that. Still a little bit of cautiousness in terms of the markets overall with things there. So really the things that's really propping things up at this point in time is the small caps in terms of the Russell at this stage and the bonds. Heading across to gold, still very weak, as you can see. We're well below short-term moving averages, and it's been respecting those short-term moving averages for quite some time as well, and also lower highs and lower lows in relation to the lagging indicator. We take a look over at silver as well, same story. So precious metals are really, really taking it on the chin at the moment, and we're not seeing much abating at this point in time in relation to that either. Now, you did mention copper as well, Yash, so let's have a quick look at that. And you can really see that some strength is coming back into the market in terms of a little bit of a bounce back off the yearly VWAP being the green line just there, but nothing to write home about yet at this point in time because the Tenkan Sen is still below the baseline at this point in time. See that blue line below the red? That's still a little bit of an issue overall there. And the lagging indicator is actually below the unit price as well still at this point. So we still have some weakness, even though it looks as though we are getting a bit of a bounce off some important key averages here in terms of the unit price itself. There's still a little bit of uncertainty in terms of certain instruments, but it is good to see at least that the Russell seems to be stabilizing. And I think that's all we can really summarize at this point in time in terms of the overall markets. So we've got the Russell stabilizing, we have the bonds strengthening, we have the bond yields at least weakening as well, which is good for the overall economy. But there are still some concerns in the market at this stage in relation to precious metals, particularly the gold and the silver, still not finding their feet and still not actually improving in the overall scheme of things. The dollar is still strong. That's a concern overall as well too. And it looks as though the SPY in itself is losing a lot of relative strength against a lot of the other instruments as well too. So a bit of caution still needs to be played, and we still need a little bit of, I suppose, confirmation from certain elements as well before we can really say full steam ahead. And it's not really the strong bull market that everyone really wants to see at this point in time. Bitcoin and Ethereum are still looking wishy-washy at this stage as well too. We have to be honest and everything there. You've got that monthly candle that's going to be forming. I can't really see a 20% increase in 2 days to be able to get itself back up above that sloping trend line on the monthly. So let's be honest and let's be real. These are the kind of things that we are seeing in the overall scheme of things. And look, that's okay. We've got to be unbiased and we've got to say what we're actually seeing on the charts. But there could be some recovery on the way with all of these instruments as well. It just may take a bit of time and a bit of patience. Let's have a look and see what these levels are. We'll keep an eye on all these levels. If you like what you're seeing with all of this as well, come along, join us with the journey, and definitely make sure you subscribe, and we'll take you along the journey as we get through all of these things. These levels fall out beneath us, then by all means, we're going to be able to let you know what those levels and important levels really, really are as well. With that, I'm going to hand it right back over to you, mate. You can help in terms of concluding everything for us, and we'll see everyone midweek.
Thank you for that, Steve. And I'm in agreement with most things Steve has said. The
Apart from
crypto
Bitcoin
narrative
stuff.
The crypto narrative, although is looking fairly bearish right now, doesn't look like we're going to have amazing amounts of recovery in the next 2 days. So let's just see how the narrative plays out for the upcoming weeks and whether we can close back up above that monthly trend line. With regards to the AI narrative, that to me has been overheated for weeks or so. And the way things pan out for the next couple of days with our involvement with China, we'll see how that progresses for the AI aspects. For relative general economy, things are looking not that bad. If inflation does take a little bit of a control or a cool off, from there onwards, what Kevin Walsh has to say all comes into perspective in the next 2 to 3 weeks or so. But the beauty of all that, guys, is we are coming to the end of the financial year in Australia, which is a bit of a good celebration because, we are Aussies. And although it's not a big deal in terms of generally speaking for other channels, this is a big deal for us because we are a financial channel. So it has been really fun coming along for the last 6 months on the journey with you. And we appreciate all the support that you guys have given, liking, subscribing, commenting. Mark, you've been an amazing support. So thank you so
Pleasure.
much for that. For today's word, if you're still following along in this particular video and you've enjoyed the journey with us, put the words EOFY, EOFY, end of financial year. It would be love. I read and review, we read and review every comment. So we'll give you a shout out on the next week's video as well. But thank you so much for joining along on this journey with us. And all I'll say is that if you are here with us until now, please do give us a subscribe because that way you will continue on the journey with us moving forward. But thank you so much, and we will see you after the EOFY.
See you Wednesday, everyone.